Hi, I think we had a big day in the markets today with both the US elections and the big news yesterday of the 500 and 1000 rupee notes being discontinued. And I think a lot has been said out there. I thought it's important for us to just spend a few minutes, understand the specifics and details of how it's going to impact us in the Indian economy and especially our equity investments. Right, so let's just jump right into it. So the immediate impact, of course, is negative. While the longer term benefits that everyone's talking about are huge, let's just focus on quickly what are the short term negatives that we're seeing. One, of course, we're seeing over the next few days, the issue around logistics, people running around for scampering for smaller notes. What do they do with the current currency that they have? Questions that are not clearly answered for a lot of people. I think a lot of that is becoming clearer over the next few days, but the bigger impact in the next 2 quarters is when we see there's going to be a slowdown in consumer spending. Because as people readjust to this new so-called equilibrium, there will be a slowdown in consumer spending. Some sectors are going to be severely impacted. Sectors like real estate, textiles, gems and jewelry, which are really dependent on cash as a lubricant to run their trade, they will get impacted over the next 5 to 6 months until this whole sort of cycle readjusts. And of course, what that means is for the next 5 6 months, GDP growth will be impacted. So yes, we are going to pay a cost in the short term for what's happened. So, of course, it's very important to understand what is the size of this problem or solution that we're looking at, right? So when you look at the 500,000 rupee notes, there's almost 14 lakh crores of currency in circulation of 500,000 rupee notes out there. And this has shot up dramatically, last 30, 40 years. In fact, if you go back in 2001, only 25-26% of currency in circulation was these big notes. Today it's almost 85%. Now that speaks volumes for what's happening in the economy. And I think let's sort of figure, how this taking away of these notes will impact what's happening to the economy. So let's see how we will transition over the next 5 months. So one, of course, is people who have legitimate accounted for money. What do they do? You go to a bank, deposit that money, or exchange that money for a new currency note. What is the price that we pay for it? Some hassle, right? But we're also looking at a large quantum of unaccounted for money, which is also called black money, right? And there are three things that one can do. One is do nothing. The currency notes expired worthless after March 31st. And what does that do for the government and RBI? So this is the currencies that the RBI has issued is actually sitting as a liability in their balance sheets. Now for people who do nothing with these notes and let them lie, RBI is completely free of this liability, which means it's a big gain to the Reserve Bank and therefore the government of India. The second option, of course, is to go deposit in the bank or exchange money, but in effect we will end up declaring this money and therefore end up paying taxes. And which means that if we pay taxes, these taxes will not be normal taxes, we will end up paying penalties as well. So almost 50-60% of this money that is declared will end up going back to the government again as taxes. The third, of course, is we're hearing a lot of people trying to find, sort of ingenious schemes to figure ways of avoiding paying this tax, but it's going to be difficult, right? Irrespective of whether they manage to find a solution or not, this money will enter the formal banking system. And of course, for the people who are attempting to do this, they're taking on risks of tax rates, etc., because the information that is being captured is significant at this point of time. So what we're seeing now here is a massive amount of wealth transfer, and almost sort of first time in history you're seeing a transfer of wealth of almost 5 lakh crores into the government hands. The question you might ask is, how is this happening? Let's look at it. Right, so we have about 14 lakh crores of these currency notes out there in circulation. My assumption is 50% of this is probably accounted for, right, which is legitimate money. So about 7 lakh crores is legitimate money. So these people can go back and deposit this money into banks or exchange them for currency notes. No impact, really. The circulation, money in circulation will not change. But there's 50% of this which is potentially illegitimate or black money. Now there, almost 60 to 80% of this money will find its way into the government hands. How? Either through income taxes and penalties that the government charges when you deposit this into banks, or for people who even refuse to do that and let this expire, the benefit that RBI gets from this. That quantum is almost 5 lakh crores. Now, how big is 5 lakh crores? The entire deficit for the government of India in a year is 5 lakh crores. So imagine this, we have almost a zero deficit here for the government. But let's also look at the economic impact of this, right? I think this is the biggest economic stimulus that we've seen in India ever. And I think if you look at it from a reform perspective, it's actually quite painful, but I think this is the biggest reform move that we've seen, in a long time. And what's the impact? So if you look at GDP, like we discussed earlier, economy will slow down for 6 months, but we will see a hockey stick reversal in growth maybe a year down the road. And I'll explain how that happens. Inflation, of course, will start to fall because a lot of the sectors where prices were high, for example, real estate, etc., prices will start to come off because the black money is getting sucked out of the system. The government deficit, like I mentioned, again, will shrink because the government has a huge tax collection. And also, once this money comes into the economy, then year after year, there are more taxes that the government is collecting. So that's good for the government deficit. For the rupee, of course, the rupee is also going to benefit because the economy starts to strengthen and inflation starts to drop, and therefore interest rates start to drop in the country. So the rupee should also benefit. So coming back, I think, how does the economy sort of come back next year? Once this money sort of finds its way back into the system, there are 2-3 things that start to happen. One is you see almost 7-8 lakh crores of money coming into the system, or at least into the banking system, as base money, what is also called as M0. Once this money sits there, what happens is as banks collect deposits, they can also lend money, and in turn money multiplies. Typically the money multiplier in the economy is 3 to 4 times. So 7-8 lakh crore deposit into the banking system means that almost 20-25 lakh crores of new money gets created. Now that's huge, and that means interest rates come down, which is beneficial for economy, beneficial for growth, beneficial for consumption. The second thing is sectors that are impacted right now, real estate, textiles, gems and jewelry, they will have their teething troubles for the next 6 months, but as things settle down, I think they will also start to benefit from this consumption boost that we're going to see, at least in terms of not having, the initial pain will be large. Some sectors will have a structural downturn, for example, real estate, but at least things will start to stabilize for them, as this money comes back into the formal system. So now, how does it impact the various asset classes that we have? First, right up front, I think it's a very easy call that bonds will actually do very well, which means that interest rates will go down and bond prices will go up. Why will interest rates go down? We just touched upon that a lot of this new liquidity will come into the system, and this liquidity will create excess supply of money. One. Second, as black money gets sucked out, inflation will also start to drop, which means a combination of these two things means that interest rates will actually fall. The other, of course, big thing is that the government's own borrowing requirements will fall dramatically because they don't need to borrow anymore, as much as they were, because they will have 4-5 lakh crores of this money coming into their kitty, which means to that extent, borrowing also drops, or supply of new bonds drops. So bonds should do well. Real estate, I think, is probably the biggest victim of this whole exercise. Typically if you see across the country, 80-85% transactions are primary transactions, which means customers buying property for use. And on average, if you see across the country, 30, 40, 50% of transaction values are typically in cash. Now suddenly, the ability to ask and deliver this cash disappears. And my sense is that 20 to 30% of real estate values will sort of also evaporate with this black economy going away. So real estate anyways was struggling with a lot of supply and structural issues, but black money is the equivalent, in our view, of the FI in the equity market. Likewise, you have the black money in the real estate market. So as black money gets sucked away, real estate will take a big knock. Gold, I think it's a difficult call. It's neutral to negative. So on one hand, of course, lower black money will depress demand, but to the extent people do want to still keep black money, they would rather prefer gold than actually keeping currency notes anymore, because the gold, at least gold cannot seemingly be banned by the government. So gold will have some demand coming in from there, but on an overall basis, I still think it's tending towards slightly negative for gold as well. Equity is the biggest beneficiary, I think, in this whole exercise. And let's look at why equities is such a big beneficiary. So first of all, I think, we are seeing a big shift from physical assets to financial assets. So household savings in India, almost 60% of them were going into physical assets, which is largely real estate and gold. We're going to see a shift away from physical assets towards financial assets. The second big thing is, of course, a lot of the organized sector in India, which was actually paying taxes and was compliant, will tend to benefit now, because the unorganized sector, which was sort of trading in cash, not paying taxes, will tend to suffer, because now they will have to compete on the same level playing field with the organized sector. Now, most of the listed equity space is actually in the organized sector, and which is where we believe listed equities will tend to benefit. Third, of course, is that a lot of these corporates who have borrowings, as interest rates drop, that borrowing costs will drop, which means profits will rise. And finally, most importantly, lower interest rates also mean higher valuations. Present value of future cash flows from these businesses becomes higher as the interest rate that I use to discount them goes down. So I think net-net, it's a windfall for equities. Short-term, some degree of volatility as people are trying to figure out what's happening to different sectors. But I think in the long run, it's a massive windfall for equities. And I think this sort of sets the stage for a structural bull run in India. So finally, as a parting thought, I think one of the big events that happened overnight was the results in the US election, where we saw Trump sort of pull off a stunning upset victory. And there's a lot of concern. Markets were very volatile globally. In India, the Sensex opened 1,600 points down. He's probably ending somewhere around 300 points down as we speak. But I think a lot of the concern, in my view, was overblown. There's always a difference between a candidate and someone in power, and I think we will see the difference between a candidate Trump and the present Trump. Also, he's not, the US is not somewhere where the president can call all the shots. He has to take, even the Republicans of his own party across the Congress and Senate along with him, and it's not easy to just push, difficult policies through the system. So I'd be less concerned, and of course, I think one of the bright things about Trump and the sort of silver lining is that he himself is a successful businessman. He has maneuvered through difficult times and actually built quite successful businesses, which means that he's going to be pragmatic in the way he strikes trade deals. The big concern for Indian equity markets was the impact on the pharma sector and the IT sector. And I think as the pharma sector is concerned, I think things are not really, as difficult. We have certain competitive strengths. In the IT sector also, the issues are more sort of internal to the IT sector itself in terms of how they continue to add value to clients. I don't think the H-1B visa or trade barriers will really be a significant issue. There might be some fine-tuning to play to the galleries by the US, but it will not actually impact these companies too much. So I think on that note, I think we've had a fairly volatile day. Markets are still down as we speak, and probably for the next 2-3 weeks we will go through some amount of turbulence as we figure our way through this journey. But the thought I would like to leave you with is that the change in the currency demonetization is a game changer, and that's going to really change the way the Indian economy works. It is psychologically impacted the way people look at black money. I mean, what this has done is impacted black money as a stock, what people had. The question is, people might continue to generate black money with the new currency notes, all this possible. But I think this has psychologically impacted, that segment of the population which will actually wonder, is it really worth it? And should I be doing this again? And this game changer event bodes very well for the equity markets. So with that, I think let's continue to go back and relook at markets more on a bottom-up and fundamental basis and stay invested.